Hello friends, my name is Deepak and today I have a certified public accountant from Fremont with us, Mr. Sanjiv Gupta. Sanjiv ji has been practicing taxation for last several years. He has office in Fremont and Sunnyvale, and you can reach him online as well. That website address is sanjivcpa.com and his office phone number is 510-825-7563. I'm pretty sure you have heard him on radio, seen him on television, watches some of his YouTube channels, but today he is with us in our studio and I'm going to talk to him today about 401k plans. And I know you probably are thinking, Deepak, stop it. I've heard enough about 401k. I hear about 401k on radio a lot. I read about that on your blog post, and we have definitely heard this question from Sanjiv on radio as well. But I want to give a little bit twist to this question today. So please stay with me. What I want to ask him today is, what happened to people who are actually moving back to India and they have a 401k plan in the United States? So I see a lot of people are deciding to move back to India because apparently they're making a lot much money over there than they here. So what should these people do with 401k plan? Or maybe you're not moving back to India. Maybe you're thinking, well, you know what? Maybe I will go back to India in next few years. And how you should plan for that 401k plan so that way when you do move back to India, you know exactly how to deal with it. So Sanjeev ji, I hope you understand the dilemma of these people, and maybe you can kind of guide us how we should deal with our 401k plans if you're planning to go to India.
Deepak ji, first let me ask you this question. Do you want to go back to India?
Absolutely.
Well, that's the answer I get from all my clients. I've seen this client every year I see them for last 10 to 15 years. They has the same answer, I want to go back. But are they really going back? I'm not sure.
Well, they want to go back, but maybe once their kids are grown up and they're retired.
Once the kids are grown up and then you will go back, I don't think that they will like to go back, because if the kids are here, they will not enjoy the country back, because you have a lot of things are not available in India at that time of retirement. But definitely that's a question you need to answer first, whether you really want to go back. If you really want to go back, then yes, then you can think about what to do with your 401k, what to do with your traditional IRA, what to do with all those retirement accounts that you put money into it and save the taxes on it. So what are the options available for you? If you decide to go back for sure and stay in that country, let's say India, for let's say 10 years, 15 years, after 2 years of stay in India, you don't have to pay any state taxes on the amount of withdrawal you do from the 401k, from retirement account. The reason is you become a non-resident from a lot of state definition of residency. So that's first saving. Like California, if you stay more than 500, I think it's 565 or 500 days. If you become non-resident, then California will not levy any tax on any non-California income-based income. So that's a great saving, because California tax is 8-9% of any income. Now it's 12%. So anyway, so that's first saving of California, and you don't have to pay any California tax penalty, because again you become non-California resident. So you save that. What you can do when you start looking at 401k, you can look at the option of converting that 401k to either traditional IRA or to either Roth IRAs. Why? Because you don't want to leave the benefit inside the Roth IRAs. You want to have international exposure. You don't want to keep in India all the things. You want to have international exposure and stocks and mutual funds and investments. You want to have a great variety of investments. So why not you roll over your 401k to Roth IRA? What will happen that time? Don't roll over everything to Roth IRAs. So over a period of time, let's say $10,000, $20,000 every year. If you are married filing joint and you are US citizen, resident, green card holder, if you do $20,000 of rollover from your 401k to your Roth IRA, of course that will become ordinary income. You have to pay tax on it and penalty, but you will get exemptions. That you will get a standard exemptions and you will get a personal exemption for being married filing joint. So you don't have to pay much taxes. The tax will be paid, let's say, on difference of $5,000 to $7,000 of income. That will be, let's say, today tax rate is 10%, which I think it will go away definitely. If fiscal cliff issue is there, let's say it's 15%. So you're just paying $750 max, plus penalty of 10% of withdrawal. That will be 10% of the, let's say, 20,000 of the withdrawal amount. So you're paying $2,700 on $20,000 of conversion to Roth IRAs, and that income is tax free after that, and you can invest as you like. So that's first option. Second option is you can take the distribution out. You can take the distribution out from the Roth 401k, and you can use that money for any purpose in India, like investment in real estate or any other thing. If you do that, definitely you have to pay. It's the same thing, the ordinary income tax rate, like whatever the 15%, plus you get the exemption and everything and penalties. So you can look at the option of investing in India, take the money out, or converting to Roth IRA, which is a better option because it gives you international exposure of doing that. Or the other way to avoid paying taxes is when you take the money out and you have that income, it becomes earned income because it's ordinary income. You can use that money again to reinvest in traditional IRA.
Wow.
And again save taxes. And keep on doing like this. If you do like that, there is a definite way, like your tax bracket instead of 15% will become effective only 5%. The penalty will again come down to become effective 5%. So there are ways of doing it. But definitely the fear is very important. Always we see what will happen to my 401k. Nothing will happen to this country. Nothing will happen to 401k. Something will happen to you, not to this country. If you don't do it the right way, you will be ending up paying more taxes and penalties. And of course, India does not have any tax on any pension plan, on any retirement account you have in India, in US. But if you take the money out from there and use it in India, you will be paying tax in India on that income. So beware of that regulation too. So as long as the money is in US and is coming from the investment account, retirement accounts, there is no need to pay any Indian taxes. But if you use that money in India, the need arises to pay the Indian tax as well.
So there you go, friends. So now you know the answer. The trick is not to take the money out, do the Roth IRA conversion. So that way, when you are doing that conversion, hopefully you're not earning any income in the United States anyway. So, and you're not US resident, so you don't have to pay huge taxes regardless, and your tax bracket will be so low that the penalties you have to pay to do the conversion will be negligible. So it's a great strategy to reduce those taxes. So I know it's easier said than done. So when you're ready to do the change, definitely consult with Sanjiv ji. He'll walk you through the process and help you out with it. If you are planning on moving to India, in the meanwhile, maximize your 401k. So when you are over there, you can do the Roth conversion and take advantage of for tax savings as well. So like Sanjiv ji says, fear is your biggest enemy. So avoid the fear. US is here to stay, and hopefully so is your 401k plan.
At this time, only US people are looking at the US only.
Right.
Europe is gone. The Asia is like lot of inflations, and US is the only country left behind.
Right. So friends, let me give out Sanjiv ji's office phone number one more time, just in case. It's 510-825-7563, 510-825-7563, or you can reach him online. That address is sanjivcpa.com, sanjivcpa.com. But before I let you go, I'm hoping that Sanjiv ji have a joke of the day for us.
Yes, joke is ready. So the joke goes like this. I always talk about taxes, so let me talk about this one as a joke about the IRS too. So IRS auditor sent a notice to a wealthy person, like he wants to see his place and want to audit his stuff at his place. The reason for this audit was the income was shown very less, like let's say $50,000. So the IRS officer went on the date of appointment to his place. He went and went. He did not find a place for a long time. He keep on searching. Finally got the place. It was near to a beach and a huge mansion. So the IRS officer thought about it. He said, "Okay, I'm going to get something from this guy now today."
He had a lot of money.
Yeah. So he went inside, and the owners came and met him and sat in the office, and they were examining a document. He said, "Mr. Wilson was the name of the person, taxpayer. Mr. Wilson, I see your taxes. I see your tax return. It shows that income you make like $75,000 of income, and if I am not mistaken, the mention that you have it here, it may be costing at least a couple of millions of dollars. At least I will say $4 million, $4 million cost. How did you accumulate so much money? How did you buy this mansion?" Well, Mr. Wilson said, "Sir, I'm really a poor guy. What happened is, I was gone on a fishing trip, and while fishing, I got a very big fish. And when I caught that fish, the fish told me, 'Let me go inside the water. I will give you one wish and let me go inside the water. Tell me what you want.' The gentleman said, 'Okay, I need a huge mansion near the beach, and I will let you go.' The fish said, 'Okay, that's done. When you go to your house this time, it will be a big mansion near the beach.' So the I went and saw that it was a huge mansion, and here you go, this mansion at the beach. So the IRS officer said, "Do you want me to believe that story, Mr. Wilson?" Mr. Wilson said, laughed and said, "Well, you need documentation. This is the house. This is documentation for you. What else I can say that?" So the moral is, the documentation they need, the more documentation is there. When documentation is there, they can't negate it.
Proof is important.
Proof is important.
Right? So there you go, friends. Keep the proof.
Keep the documentation part.
Keep the documentation. If you don't have it, somebody can challenge you. But if you have the proof, then nobody can challenge you. But thank you so much for watching this segment. Sanjiv will be back with us next week. Hopefully, he will bring us new joke and he will bring us some very useful information that we all can share. Next month will be January, and hopefully he will bring us a lot of good information about dealing with the taxes. So we'll talk to him much more about that. But in the meanwhile, if you have a question you want us to bring on air next time, please go online and send us a message there, and we'll try to bring your question online. But once again, his office number is 510-825-7563, and his website is sanjivcpa.com. Well, as usual, friends, thank you so much for watching this segment of our show. We'll look forward to meeting with you next week. But till then, goodbye and thank you.